Good day, I'm Martin Gagel with Market Radius Research. It's Tuesday, June the 7th. And we've got CEO Sebastien Mailhot, CFO David Montpetit, and Steve Lee, VP of Business Development of DBox Technologies, joining us. And DBox creates haptic systems for theatrical venues, home entertainment, and commercial and training simulation markets. Glad to have DBox back to review the remarkable year for the company, with the company releasing some of its strongest financial results in the most recent quarter as the company returned to an EBITDA positive performance. With restrictions, pandemic restrictions having been largely eliminated over the past 3 months, and numerous initiatives in place for its home entertainment, commercial entertainment, and simulations and training markets, we're here to review the last year and get an outlook and perspective on what's coming up in the next quarters and years. But please remember, this is neither investment advice nor recommendations. We're here to learn about the company. Thank you very much for joining us. And Sebastien, I believe you're going to walk through your deck here initially, so please take it away.
Thank you, Martin. So first, always a pleasure to come back here, and as well with the street. So for us to come down once in a while and to give a good business update and financial update. So happy to be here. So let's jump right into the presentation. So, disclaimer, you made that already for us, Martin. So of course, first thing, memory is the capacity to forget, right? So of course, we know it's been a challenging business environment. So we can think about definitely the COVID and social distanciation. If we try to put ourselves in the last 12 months, price increase, availability of components. We need to remember as well, we had a night episode or a cyber attack during the year, traveling limitation for international company. And definitely we know that resource scarcity and retention. So this was our business environment. Usually when we present that, it means that after that, we want to prepare you, of course, to bad results, right? But we're pretty happy to say that, yes, we did have a challenging business environment, but we're on and you saw the result and to talk about business. And we're pretty happy to talk about the Q4 and fiscal year 2022. We had significant growth, return to profitability, and proving that, yes, DBox can generate profit. So profitable growth, right? So these are two important words, profitable and growth. When I picked that business 2 years ago, I know there was a skepticism into the market that when does DBox could make a profit. So we're happy to say, and you saw the results, that in terms of growth, we did have a significant increase in our sales level, both from our sales of system, but as well our right for use, so meaning that mostly the money we're receiving as every ticket sold around the planet. So we're happy to say that all our business segment, theatrical, racing, professional simulation, and the home entertainment have all been growing. The significant part of the year in terms of growth coming from the theatrical sales of system, and as well the team business that create at a 5-fold rate. On top of that, people were seeing that theatrical is dead. So you can see this impact. We have added close to 5 million more in revenue, which gives definitely a tremendous impact on the bottom line, like successful movie performance and people going back as everyone wants to get entertained. Now it goes to profitability. So first you saw the last quarter. So with a $7 million quarter, DBox was able to provide an EBITDA close to $1 million. And yes, this EBITDA is a pure EBITDA. There's no grant from the government. There are no unusual item. This was done purely from operating the business. Secondly, of course, you see that we had an adjusted EBITDA of minus 3.5 last year, moving to close $1 million. So that gives a delta of 4.5. But more importantly, when we're taking out the grant, we're able to say that the transition from last year for this year is a plus $6 million EBITDA change between fiscal year 2021 and 2022. So we're really happy with the results, the financial that we're there, and that's what we wanted to prove to the street. We can do growth and profitability. And yes, my job and the job of the executive is to balance short-term initiative, mid-term initiative, long-term initiative, and as well to weather any challenge we might have from the external concept. So last thing I would want to say is if we're looking at the last quarter of 7 million, if you analyze that trend, we're already at a trend that is beating pre-COVID our year end that was 2020. So we recap on the year, but I want to recap simply about the strategic plan of DBox. Of course, we talked about profitable growth, but what we're trying to build is definitely, as we're saying, DBox is providing haptic experiences, meaning adding motion, haptic, and textures to create real life experiences by involving the body. So our intent is to build that haptic platform, be able to produce, distribute, and monetize content into multiple segments. Strategically, we are focusing right now on 3 segments. Theatrical, where we were expanding commercialization, racing, where we're accelerating commercialization, and at home and mainly PC gaming that we'll talk about, that we're creating the home foundation for midterm and long-term growth. So let's talk about around that. Definitely building a company is definitely having commercial success, building partnership, transforming the business and reinforcing it, and as well getting our haptic leadership throughout the years. So talking about theaters, the foundation of the theatrical market is there. There's an appetite, even if people were thinking differently, there's an appetite for immersive experience. You have seen that we announced more than 50 screens, and no other solution has put that at that level in the market. We were seeing that with record level ticket sold on movie. As an example, Spider-Man was the best ever movie for DBox, even when there was some countries that were still closed. And as well, people were thinking that with the streaming arriving that the theatrical was dead. And still again, the window has been put back on those movies. The 20 biggest movie continue to generate massive, and streaming is having its own challenges with some churning rate. So theatrical is there to provide movie experience, and we're happy to continue the expansion. So what we're doing right now definitely is to continue move the footprint. At this footprint, definitely create a sales of system. So we're creating short-term margin, but on top of that, creating that recurring stream that we all love at high margin for the future. Around racing, for the last 20 years, DBox has been in the racing business. We were mostly, of course, selling our actuator to smaller integrators, which of course were selling to various projects. What we have started to transform 2 years ago, and with the first announcement that was with the International Automobile Federation, which is the body that is with all the car manufacturers and all the race, such as F1, is to move our discussion more strategically with car manufacturers, and as well with those bodies such as the FIA and in the current year in NASCAR. Why is it important for racing? And definitely it puts us to be strategically relevant for them. Secondly, they have a tremendous, and they're creating the traction to have a better visibility to definitely share more haptic system. And strategically, was it important to understand? And there's a big traction by car manufacturer. They want to expand their brand from teenager at home that are doing racing, from people that are going into sim center, meaning area that people can have simulator and do racing, as well for people that want to buy a car to transfer those dealership to showroom, and as well to go into the paddock and all the real F1. So this is a customer journey that they're building to be able that all people will be connected. And haptic is part of that, and it's create an emotional experience connecting their brand to those consumers. Home entertainment, our focus right now is on PC gaming. Why PC gaming? Definitely in gaming, there's PC gaming, there's console gaming, and there's all those mobile gaming. In the future, it's all going to be important. But we decided to pick PC gaming for strategic reason. First, we are not in mass market production. We are at early adopter, putting that technology out there, getting an haptic and bringing that viral. So it's technology introduction, and that persona is perfect for us. First, PC gamers are the people that are already investing into hardware. They like the customer, their keyboard, their earpads, their experiences, and they are more tailored to accept haptic into gaming more closely. Secondly, the solution that DBox is going to be providing to the market is that 100% of the PC gaming will be haptic driven. Not one game, not two games, all the games. We have created that solution. Thirdly, that that all the consumer will be able to customize their experience and to exchange their profile. So why again PC? This is a significant market, perfect persona, creating and engaging and exchanging with those consumer, and definitely, and yes, we all understand that, pushing now after that with all type of devices in the future to mass market. But this is the start, and execution is about making things right. It would be easy to be in all business segment, but lack of focus means lack of execution, means lack of profitability. This is what we pay for to take those decisions. Yes, it's true, to make an update with all the people, we wanted to have that share in the consumer hand by early 2022. Business decision with our partners and our supply chain is now bringing that product in the consumer hands later into 2022. So revenue should start to hit our Q2 this year, to product in the consumer hand by Q3 of 2022. Yes, I'm like
Sorry,
you.
Sebastien.
Yep.
Sorry. And when you're talking Q2 and Q3, those are your financial quarters, not the calendar
Correct.
quarters?
Our fiscal years, our Q2 is from July to September.
Yes.
Yep.
Okay.
Good point. So yes, I like every one of you, I would want to have that earlier, but we're comfortable with the time slate and comfortable with the strategy that we're having with those partners that have a tremendous visibility. On two other direction as well, all our rest of the business. So definitely our team business, our professional simulation business is still there and growing, as you saw in the result. But of course, these are nurturing business. We might change the strategy in the future, but now we're nurturing with our current consumer and focusing on the three segments we talked about: theatrical, racing, and gaming. Internally as well, we made some transformations. We wanted to bring a different skill set and be closer to those ecosystems. So I'm proud to say that we have Karen and Trip, both on the West Coast in San Francisco and Los Angeles, with background at Disney, Paramount, Nintendo, etc. So they do bring closer ties to the ecosystem, good time zone, good profile, and as well product marketing and selling expertise. So for us, that was needed to pivot the business. Same thing from a board of director. We want to have a board of director that continue to be elevated, to be able to support and bring value to the business. So the latest addition we made is Rinka Dikic, which bring a background from Goldman Sachs in the US in terms of corporate financing, and as well has been spending tremendous year at Disney and studios. So she knows them inside out in terms of strategy and technology introduction. Last quarter that is important to build out is the one about industry leadership. So as we all know, haptic market is booming. So people around the planet, and we're talking about the Apple of this world, the NVIDIA, all those big companies are getting together, and we have created the haptic industry forum, and all those companies are getting together to exchange about haptic, looking at business model, looking at the standard of haptic into the future. So DBox has positioned itself as the chairman of that group, being the leadership within 20 years around haptic, and be able to close for business development and be on the forefront of what is happening onto haptic. Mila as well is we started, of course, a couple of years ago, initiative around the artificial intelligence to scale up the production of content. Mila is an organization down there that we have been partnering for a couple of years to speed up those exercises to, of course, bring as much content as you would want in the future for movies, series, music, clip, and etc. The third angle that is really important as well is on training. So Donat is a school that is focusing on training the gamer of the future, people that are producing games. We're happy to say that we're partnering with them because right now they're entering into their training university curriculum, the haptic experiences, so people learn around haptic and put that into their game to have the future trainer and employee of the future. So this is a quick recap of 2022. So execution to make sure to drive sales, create partnership around scalability, and transforming the business definitely to look at what we are going. So what would be 2023 in terms of focus? So we talk about theatrical, gaming, and definitely racing. So of course, that should be the one that you should be following us, both in terms of revenue, but as well in terms of announcement. So we mentioned about theatrical, so it means rollout, for print. There's a nice scale as well of movies, slate of movie, which is going to be continue as well to increase our recurring revenue, which we love so much. And as well, those theatrical venues are now getting a look into hotels and other area like that in the future, where we could bring some kind of cinema in a box with some partners. Racing and brands. So this is where we're connected. So of course, look about Grand Prix, looks about partnership, looks about definitely Sim Center rollout around that. So this is where the next game is that. So to pick up from our integrator business, but to move into higher volume players that can move the needle with car manufacturer and be at the center of their strategy and creating partnership. Lastly, definitely, we're saying we have various initiatives, but the one that we're putting the more emphasis is on PC gaming. So definitely getting that chair out there. So we're having current partner and other partner discuss. It's important to deliver that product with the experience, etc., so we can engage with the audience and definitely create the experience of the future. So this is going to be a key milestone for us. Secondly, as well, as you know, that product is going to be more for entry point, around the 2,500 to 3,000. So yes, it's not for the sake of everyone, but yes, we are working with other initiatives to bring a product at a lower price point with different technology and partnering with third-party devices such as vest, glove, shaker, etc., to bring all haptic code and experiences through various type of devices. So this is going to be where DBox we want to execute early and continue to bring that growth and profitability. Profitable growth. So we want to grow, but if we would be bringing company with losses, some people won't be liking that, right? So that's what we have to balance. So maintaining a high growth environment, when they're there to grow there 10% a year, and definitely continue to bring that profitability level. A company like DBox, a public company like DBox, around 30 million, before we make some strategic investment, is easily able to deliver 3 to 4 million EBITDA as a simulation. And definitely after that, it becomes what do we re-inject based on the opportunity that we see down there and their capacity to bring short-term profitability. Again, balance between execution and business environment. So definitely, again, we're saying theatrical, racing, and gaming. This is execution. We are paid to take decision. We are paid to take our emission out of the door and take the best one, which balance the profitability and the growth. Yes, the business environment is still challenging. Interest rate, right? Geopolitical situation, etc. These are things that could affect us, but I think we showed that in the last 2 years when it was probably one of the worst market ever from various angles, but we continue to adapt. So this is a quick summary. I wanted Martin to make that a quick, sharp summary so we have more time for your question that you might have and definitely for the audience about the execution of the business.
Thanks, Sebastien. I guess you covered a lot there, and why don't we kind of start with sort of in the history and then look more forward looking on the financial results. The last quarter for rights of use and rental was strong, not as strong as Q3, your December quarter. That's typically the strongest quarter because that's at Christmas time and so forth. But at the same time, Q3 had still some kind of lockdown type stuff happening. So it probably wasn't at its full potential, not the big releases. So Q4 was a little bit off from what Q3 was. I guess, like, how fully open, how fully engaged were movie theaters in the March quarter? And can you just talk about that and how you see it, sort of the moviegoer? What is the behavior? Are movie theaters fully back on, or is it people still trepidatious, or they're just waiting for the big blockbusters to come out?
Perfect. So first, it's true to say that there's some kind of seasonality if we're looking about the 20 years or the forever of history around theatrical. So usually if we go by calendar, the October 1st to December 31st, and the April to June quarter are the ones that are stronger in the industry. So because as you were saying about movie that gets, now I'm taking out outside of COVID, and we'll come back to that. So these are the 2 quarters that are always been, if you look at the last 20, 40 years, the biggest in terms of movie, because that's where people gather before Christmas time and the spring and early summertime. So you will always have that situation. it is true as well, as you were saying, that when there was that COVID and at the really start of 2022, yes, there was some country that did close, something like that. Some movies were pushed, so yeah, that Q1 as well were affected. It's interesting to remember, Martin, as well, that before the COVID, DBox, with the previous base that we had in terms of footprint, did deliver over 8 million of recurring revenue, those right of use. So definitely we're progressing well and it's going. In terms of performance, Martin, two things that are important to say is, generally speaking, and I gave the example of Spider-Man, the performance post-pandemic, even if some country are still challenging, etc., is beating a lot of pre-COVID figures. So when you're saying, are people getting back to the movie? Yes, people want to get entertained. A lot of people about less traveling as well are putting that still a cheap entertainment to go to the theatrical movie, and they go to those big blockbusters. So yes, the demand is definitely there, which is really important. Second thing as well, I could be saying, and lastly on the experience is, I won't be sharing the data, but the rise of immersive experience is even more critical, and exhibitors are putting more energy, more marketing around that. And we have information as well coming from our exhibitor that we had one key exhibitor that we looked at, that our occupancy rate is double their standard occupancy rate. People, when are looking to the movie, they want to have the best thing. So this is something that is even accelerating. So we had that before the COVID, but even more, people want to have more the immersive experience, such as DBox, and the marketing of the exhibitor is even more on those premium experiences, because they bring the key consumer, which invest more, and as well bring more revenue per person that is coming.
Well, and I guess as well, like, it's sort of the theater versus the sofa and Netflix. And if you want to get people to, hey, let's have the big experience in the theater with the big blockbuster movie, let's throw all the bells and whistles so that when they go there, it really, wow, that's something I can't get at home.
Definitely.
And is that kind of their strategy? They're like, okay, we have to invest in the theaters. If we want to get people off the sofa, we got to have a great experience in the theaters, and we have to invest.
Yeah, yes, and I'll be using some rough figures, and this has been the truth through various type of new technologies, such as even a streaming. It's true that people are doing more streaming, but let's say you have a few hundred movies coming to the cinema every year, but the mathematic is always the same. 3-4 movies make 25% of the box office. 20 movie makes, let's say, 70 to 80% of the box office, and after that you have the rest. So a bit like a toy store that makes most of its money during Christmas time. For them, it's distributed all those blockbusters. So Martin, as you're saying, the 20 key movies are the one that drive that business. And even if you're at home, the people are going for those 20 movies still, because it's different and you cannot have that at home. It's a different experience. So that's why it balances out. And every time there's a new technology, that foundation is still there. And yes, Martin, before the question comes from the audience, there's been discussion around the window, right? Well, people in streaming. So during the COVID, some of the streaming launched some movie at the same point in time in theatrical and on streaming, which definitely decreased the box office. But all studios have reconfirmed a window period, because producing a big movie takes a lot of money, and even the streaming is not enough by themselves. So it needs to have an hybrid about a live at the theater followed by a second live. So, and this is a good news as well, as people were thinking that the window would be down. There's going to be different content from different markets.
How have the theaters survived this whole pandemic thing? Are they in relatively good shape now and ready to invest in upgrading their experiences?
That's a good question, Martin. So definitely, I'll say that, Avani, it's like they have two categories. They have some people that are in good position, that did manage their finance properly. Some receive some grant as well, and they're investing, of course, in the future. So you want to be with those partners. But it's true around the world, in some country, that some have been hit on their balance sheet. So the short-term focus is to operate and generate some, and the CapEx has been more constraining. So yes, in terms of our strategy, even at DBox, we need to pick the big brand, as some might have 1 or 2 years still before going to pre-pandemic balance sheet level.
All right. And I guess we've kind of, hopefully we're done for the most part with COVID here. How have you changed? I get the sense, and I haven't done a real thorough in here, but how have you changed or restructured the business? Have you made it leaner so you're more profitable at certain revenue levels, or how has DBox sort of changed the way it operates through these last 2 years?
Good. So first, I'll talk diversification, after that profitability. A couple of years ago, theatrical were 75% of the sales of DBox. If you look at this year, it's 40%. So still an important business specifically, but what we're seeing, we're building that uptick platform. And we saw that through COVID time. It's important to have multiple growth area, right? And diversification, which definitely brought some feedback to DBox. So that's one dimension that we did in the last couple of years. And that's why we have those 3 strategic pillars. So they complement each other as well, but they provide a diversification and different growth stage. In terms of profitability as well, two numbers to share. Pre-pandemic, let's say with the same level, because the last year pre-pandemic, we finished at 26 or 27 million. So divided that by 10 is 6.5 million, roughly a quarter. We were 130 employees. Now we're 91. So you can see the difference. And right now, our executive structure is there. Yes, as we move along, etc., there's going to be more addition. But you understand, you can see right now there's a different level of how we operate with the business. And we made some transformation pre-pandemic that now are paying off in terms of our executive structure. When I joined the business, I cut the executive structure by $1 million. And now you can be seeing in terms of execution as well and working through partners that allow to deliver growth. So I'm not saying we won't have any hiring, but that's 2 elements that you can be seeing on the business model that we changed.
When you lean the staffing situation, and I'm just looking at your financials here, like your R&D is up a fair amount. Yep. So you're investing in R&D. How did you restructure, or where did you take, I don't know if you call it the fat out, but where did you make things a little bit leaner so you can focus on other areas? So
first I would be saying employee are the key asset that drive us, but as any company grows from 5 to 20 million, so 20 million to 100 million, you always like to review your company. So yes, you want to keep all skilled people internally and drive those people and develop them. But this is what we do. So generally, there's been at some point in time, DBox were doing many things. And I felt that the profitability, even if it was interesting, it was not impactful. So now we are focusing tight group on opportunity to drive revenue. So that's where there's been a couple of changes all around the business. In terms of the technology, as you're saying, and that's where I said that a $30 million company could generate 4 million EBITDA if you wanted to. So definitely the pivoting we're making with some racing initiative, the gaming definitely needs a foundation to build, right? If I'm cutting, let's say if I'd be cutting completely gaming, yes, you can drive the EBITDA higher. So that's where we're focusing on some segment, but that's the area that's right now where we're talking about how do we connect with joystick, how do we connect with the chairs, how we made that experience. This is how we build a consumer experience. How we create a fan base that people can drive and get their content. So this is where we need to create a foundation that yes, the investment is higher than the return on revenue. So that's why you have again theatrical that we're growing to bring more EBITDA. Racing, that is a pivot point to bring that to volume again, to move that EBITDA. And yes, we're investing more into gaming. So that's why the technology amount generally says around building the experiences, the software and the hardware has been expanding in the last year.
So so moving on to let's say on the gaming side of it, there's a bit of a chicken and egg issue out there as well, where you need to sell seats. There needs to be content that's sort of DBox approved or activated, and but you need that software developed if there are chairs out there. How are you managing that, and how much content is out there is sort of active and relevant for the DBox gaming chairs? And sorry, I'm throwing too much here, but I presume there's a light mode in it as well, where it can just, if you've got playing Mario Brothers, it'll vibrate with the sounds and so forth. So it even adds content to the non-activated systems. And sorry, I threw a lot out there, so if you can.
But I understood the question. I talked briefly, but I think thank you, Martin, for bringing back the point, because I think it's important. As you're introducing a technology is chicken and the egg, right? Even DBox, when we launched the theatrical business in 2009 specifically, it was the same thing, all right? You're going to the studio, yes, get me the movie, but I have no screen, and you're going to the guy to the screen and I have no movie. So that's why we focus on gaming and in PC, because if you go to, let's say, console and things like that, the way you need to bring that to the market, it would need significant investment, but mostly, as you were saying, a smaller library, because you need to go one title by one title specifically and how it was driven. So that's why we moved to PC gaming. And yes, the way we're having that is when we do the gaming experience is through the joystick mode, through, as you hit a couple of levels more in technology, we're able to bring that DBox full experience and quality by getting the information out of the computer, getting all that and building those experiences. So the good news, Martin, to your chicken and the egg problem is you get your chair, as you say, in 2022, all the games have haptics. All the games have haptics. So your library become limitless, etc. Secondly, and of course, as we're introducing a new thing, as we're saying, is people will be able to customize I want to have more intensity around that, more things around the gunshot. I prefer those things specifically. So the nice part, as born, is yes, we're going to have the full library, but we're going to be engaging gamer with our really vivid people that they want to get on that to themselves be part of the creative process about how they like haptic better and etc. and exchange their profile. So we do feel that that was the way to go for that chicken and the egg, making sure we sell from the get-go, engaging the creator, which are the people that are playing, to have their feedback, and definitely from that we'll build the next generation about haptic based on the connection with the consumer. So that's a way of connecting. So hopefully I answered a question, but that was the fit about moving into that direction while some of the other take longer time. But again, profitable growth. I don't want to do everything at the same point in time, even it would be sexy. I don't think people will like that we spend 60 million and after that we announce a big loss and we don't have the cash. So I'm comfortable with this strategic decision we picked.
On the haptic, on the gaming side, is there going to emerge like an open standard haptic data feed, and then your haptic chair will compete with some other ones? Yours is the premium best of, or is there going to be sort of like a Dolby? It'll be DBox enabled and only your chairs or chairs that you sort of license out to. Which would be better, to sort of have a smaller piece of a bigger market, or try to capture it more like in a walled garden sort of a thing?
Perfect, but that's it. And let's talk short term and midterm. So first thing, what we're trying to simplify what we do, even if it's a gaming stake in the future, a recliner, racing, say all type of content will be able to be delivered on any type of devices. So again, coming back, gaming chairs start with gaming, but you could watch your movie, you can do music, you can do relaxation. So of course, we have it's to bring them into like the Lords of the Ring, right? One ring to rule them all. So one solution that we're doing. That first product, as we were saying, is, let's call that DBox proprietary, right? It's our own ecosystem, all talking to each other. So this is one project. To your question, Martin, definitely, and we present that specifically, this is a second project, let's say in parallel at what we're doing is, okay, we have all that ecosystem that work well, and we know that the library of content, the capacity to put haptic experiences is competitive advantages we're having. So we're building, let's say, the connection with third-party devices. Let's call that initially a commercial standard moving to a full standard. So being able for people that want to use DBox experiences library to drive the code. So yes, we're moving into more a licensing model on those small actuator where people will be able, we're going to be using our content, our way to drive content to drive those devices, being a vast cloud, etc. And secondly, as well, creating the tools so people can put the haptic themselves, but the monetization of haptic is controlled by us. So yes, you have the tool to produce haptic, but after that, you would have, like I say, to be DBox ready or DBox decoded so people could drive that. So yes, we're putting hardware and footprint in the system, but towards the end is to create a footprint and to have that subscription mode that as well, it won't be that important in next year, right? But we're building that fan base. So licensing and subscription mode for haptic content will be driven by the footprint.
So the plan is to create a haptic platform where whether it's a vest or a video game controller, you've got like a control panel. Okay, I want more oomph on the higher end or the lower end and then everyone hopefully sort of adopts this DBox standard and it's the goal would be to get that as the standard out there, and so you create a controller or a seat or a pair of shoes or whatever that have that connected, which you then can help control.
Definitely, because there's more and more company building hardware, but they have the software with the haptic experiences. So I don't want to invest to create more vests, more shoes and things like that. I better to partner with them. And as you were saying, specifically, as you're saying, yes, we had the WISE project, etc. So a couple of projects that we have, which is instead of DBox creating all that haptic coding, right? If I can use simply to put the tools in the hands of the content creator to be able that more massive adoption. So you can do that in WISE, you can do it in Unity, Unreal, as in the gaming world. So all those tools are getting adapted SDK so people can put the haptic, but we always same thing, we control the monetization to the distribution of the subscription for the consumer mass market, and if not mass market in the future and consumer initiative in the short term.
All right, and let's move to racing here. Racing seems to be a little more like in different market segments. You could have racing simulators at the movie theaters. You have them like at sort of commercial venues, at entertainment parks and so forth. And also like in a car dealership with BMW and so forth. So it's not just racing, but just sort of the simulating the automobile experience and just trying to find different places to put those.
No, definitely. So first we know, so when we're saying about haptic adoption, well, everyone will understand it, and it's already there that haptic makes sense with motion. We don't have to train them. We don't have to teach the people. We know that feeling the curve, feeling the motor, right, the shifting gear, etc., is really important. And on that, we made a scientific survey recently with Mercedes as well around those queuing specifically. So as you were saying, if I'm talking from the brand, and after that, I'll go from DBox side, the brand are getting connected. How do I connect with consumer and make them feel my brand, right? Because if you bring them into emotion, there's going to be consumer in the future. So everything that you mentioned, Martin, are true. Consumer can connect at home when they're playing their game on their rig on a console. They can connect if they go to see a car into, it could be a pop-up store, or it could be a showroom or something like that. You can go to an arcade and have, or a theater and have those racing simulator and get engaged into that process. So, and as well, definitely when you go to an F1. So their view is now coming strategically, haptic, and creating emotional experiences involved to drive at various point the consumer. If we're looking at what's happening on the floor specifically is, yes, one of the trends that we see a lot is, we used to call them arcade, right? But they're creating sim center. So you put 30, 20, 60 simulator, and you can, of course, race, but you can race against someone else specifically. I mean, driving and the nice part, and they get telemetry data as well. So even with that, they're able to see what are the best performing, the best pilot. And these are real life simulator. It's no, excuse me, Mario Kart that you're playing for fun. So these are people that are spending, like gamers, a lot of hours a week to entertain into that. So this is where a trend that is happening right now is to have multiple sim center around the world. So that's where DBox wants to play in, to roll out those centers around the world and get the DBox. Let's give an example, DBox / Mercedes or DBox like Porsche racing experiences. And the good news is all those people are the people that are coming at home. Those racers are gamers as well. So it's good for a gaming business. And as well in the future, bringing race at home into a home recliner is the thing that they could be feeling. So that's why we're making that connection, because there's the same audience, the same persona, connection between commercial, driving our consumer, and as well driving our gaming. So this is what is happening right now. And the sim center is probably where you should be seeing the more traction in the near future.
Okay. All right. And I guess just on the commercial simulations side, like that makes a lot of sense. You've been doing that for years. That business has performed quite well over the last year as well, where like driving truck, and I guess the labor shortage right now, this is a key driver for it. Okay, we got to train more truck drivers. Let's get them in simulators, or farm drivers, or any other kind of heavy equipment operators. You need to get training going.
Yeah, definitely. So quickly on the long-term trend and on our short-term decisions. So if you think about professional simulation, as you're saying, scarcity of resources, training people closer to their point instead of making them traveling less costly, evolving of technology that makes the experience wow. I'll take an example. Microsoft Flight Simulator that you watch at home, right? If you do that, you pay $90. It's closer into reality sometimes on the visual as what you have in a CA simulator at 20 million. So that tie is going. So there's definitely trend around professional simulation, that people, that trend is there about smaller simulator because of the technology, the immersivity, and as well reducing the cost of training. This is the long term. Some of the region we are nurturing that market, but we do feel it's a strong potential in the future. This is a slow adoption market. Getting into a Caterpillar or a John Deere that we did specifically, the bad news is it takes time to go into their strategy and moving around, right? It takes a lot of time to go in commercialization, but when you're part of their design, to get out of their design, it's really tough as well. So that's why it's a resilient business. That's why it's a growing business. That's why it isn't fundamental, but it's a different business and is a slow adoption rate business. So that's why in terms of nurturing, there's definitely potential, but we're spending less time and working through our integrator for the moment.
All right, that's great. Let's switch over to the audience questions here, and we'll move on from there. Thanks everyone for your questions, and please throw up more as we work through these. Do you have any development comments with the Razor chair?
Very good point. So definitely we'll launch a concept with Razor. We're having net convention, and I'm going to see using that in all gaming company at Razor, and I'll come back with that. There's two discussions we're having with them. What we do in the short term and what we do in the midterm. Short term is okay. We want to launch, as we do with Color Master, a product 2,500 to 3,000 with the early adoption. And after that, how we build the infrastructure, so we go mass market at a lower price point. So this is a whole discussion we're having. So yes, with Razor, we'll continue to have discussion and interest. I'm not announcing anything because definitely public company, so when we'll announce that. But yes, our business discussion are coming and they have interest into the haptic field about doing something. That's what I can say for today. And yes, for people that follow everything we did at CES with them, from influencer to journalists, etc., there's one thing that has been confirmed from that the experience and what we would be providing, there's an appetite into gaming.
All right. How many paying subscribers is there in the home entertainment segment?
Right now, below 1,000, not saying the specific amount, but below 1,000. So, and before we put those gaming and other people in the market.
All right. So still early stages there.
Yep.
When it comes to monetizing the gaming chair market, how would you compare the profitability of that segment to the theatrical segment, especially in the medium term? Do you think gaming has a potential better longer term prospect compared to theatrical? And they just saw Top Gun and loved it.
Good point. So there's some marketing decision around that, but I'll keep that simple. Gaming is going to be some kind of volume gaming. I'm going to be explaining. So there's the gross margin in percentage, and there's number of dollars we're going to be generating by deal. So when we're having gaming discussion and everything we're having, we have no discussion if we're below 1,000 units. So this is where, of course, and this is the foundation to start. So definitely this is one point. So when we're looking at a partnership, to support a partner like a Cooler Master or Razor, something like that, and to propose that partnership into various stage over multiple of years, we need to put some research down there. So it just makes sense if there's enough volume, enough of the dedication on their side to put to co-launch together, and that what is important. So in terms of that, the gross margin will be probably a little less, but we're building that subscription mode into it as well, which, as people are saying, is roughly right now starting at 100. I'm talking Canadian, let's see, around $100 Canadian, which we have kept as an initial fee. So people engage into the content and are getting used to Haptic specifically. So this is the strategy around gaming. So moving to hardware and subscription. And in the future, as you were saying, Martin, is we're more than willing, as volume will grow and it makes sense, to move to a pure licensing mode. So instead of selling the hardware, we're going to be licensing our technology, getting an amount per unit, and leaving people buy their hardware directly. So it's going to be decreasing the cash flow we go around that, and for us getting a better profitability and cash flow business.
All right. And then on that note, are you planning on having your own products sold directly to consumers? I guess a DBox branded chair or sofa. Right now, it seems you don't have control over the product releases with Cooler Master, etc. Can you discuss that?
Definitely. The answer is at 90% plus, the answer is no. And I know that I have some people, some shareholders saying you should sell directly, it's more easy specifically, and I do not agree. First, Martin, what I do believe, so DBox doesn't come into a pitfall that we had in the past, is when you're launching new products, I don't want to be walking alone in the desert. And I'll take an example. When we launched a theatrical business 12 years ago, I was not there. It cost a lot of dollars to bring that company to fruition, and we did that on our own. So for me, when I'm launching, as an example, the gaming market, I'm saying, if I cannot convince a strategic partner that there's a market, why the heck should I be spending that money? It's sure there's a market in 3 years, 5 years, 10 years, right? But we need to convince someone that there's an opportunity to put their hand in their pocket, to put some resources and to go with them. So that's one. I'm partnering with people, so we go together and we see there's an opportunity together and we share the risk. Secondly, in terms of specialty, let's take a Razer or Cooler Master. They know more the consumer than we do. Yes, people are saying, Sebastien, let's build that specifically. DBox doesn't have that experience. And it's not true that all company can do everything. I prefer for me to connect with people that have audiences, gaming, putting product, knowing better than us the design specifically, and working with them. I'm a technology guy in terms of my background, in terms of when I went company. And for me, the technology is to work with partners to go faster. Yes, it's true, we're not controlling everything, but so far we have proved that it is the proper business model. We might have a couple of initiatives, as we did, to get market data, introduce the product, etc., which might be direct, but our intent is to work to commercialize through partners. With the DBox branding, this is mandatory. Keep our consumer connection through the subscription, and yes, engaging into the creation of content. So that's where we're keeping in touch with the consumer through the experience, through the subscription, and through that marketing.
When Google was first launching their own phones, they weren't trying to sell that many. They were trying to make it like a reference design. It's like, here's a beautiful system where the operating system isn't too mucked up with other apps. Would you consider kind of doing a reference design, selling small volumes, just so people can kind of view sort of the perfect or the ultimate kind of the best practices version, call it? Of your products?
A bit like we were saying earlier, yes, we're looking into when it makes sense strategically with more reference design from the hardware side, as we're saying. And yes, on the production of content to have tools that we're running. So in that terms of getting the tools in the end specifically, that's where we're aiming. Of course, I'll give an example, Martin. And if Razer would be saying, Sebastien, give me my technology and I'll buy you 100 units. Excuse me, Martin, I'm going to say, bye-bye, Razer. I like your name specifically, but that way I won't be giving all the knowledge we're having and why you're working together. So this is called negotiation, right? So that's why we're looking about that, given that scalability, and scalability won't go through DBox. And that's where we're going into licensing and putting those tools out there, but always keeping the control on our IP. That's the value of the business, and as well in the monetization.
All right. Going to the theatrical market, someone's asking, what is the return on investment, or what are the economics when a theater buys one of your chairs? I guess the upfront cost and licensing fees and that sort of thing. Could you review that?
We'll do that simply without going into too much secret. So definitely, when theatrical people are looking at product that have ROI less than 4 years. If I'm going generally about any type of capex, so definitely that's why we need to stand in terms of investment. And some are working into capex mode, and some are looking into ROI, which of course is to beat their internal ROI. So that's what we're looking. So definitely DBox is well below that in terms of the way they see that. Second thing that is important as well is this is on the ROI side, and after that, definitely we bring a premium. So for people, if some shareholders don't know, there's a standard ticket, let's say $12, and people pay $8 more of premium to be in DBox. So we're bringing additional revenue, which is important as well for them, as mostly they're public company. So they'll look on capex, and they're looking as well on creating revenue. Third thing that is important as well is, if you want to sell them popcorn, if you want to sell them arcade machine, ice cream, you need to make sure that you have the proper persona coming into the theaters. And consumer that enjoys and pays for DBox are the heavy movie goers, which are coming more often, and they spend more at the theatrical. So why are we there? To bring the good audience, to bring more revenue to the table as well, and definitely to have those a melting pot of ROI from the get-go. And after that, definitely our flow of money, but for them as well, it's create more revenue around the multiple year stream. And yes, we're having multiple year stream in terms of our right of use with them. It's a multi-year contract that we're having to control that money flow.
All right. And looks like final question here. Are you making any financial forecasts of revenues or anything like that for fiscal 2023 or beyond?
Martin, I have to say no specifically. So definitely no, we're not making any earnings. The only thing I could be saying as well is definitely is if you look at our recent quarter specifically, and last quarter, definitely we had a business of around 27 million plus our consumer initiative, right? So forgetting as out what could be arriving on the business context, definitely we want to trend with the level we are right now. So, and to beat those COVID level, but I'm not making any trend. So yes, top line needs to be in, recurring will still need to go out, and yes, EBITDA level for a full year as well is a priority to grow that. Maybe two small thing, Martin, to add around that is people are following us, so there's a bit of seasonality in some of our business. So yes, I like as well how that Q1 is higher than the previous one, and Q2 is higher specifically. But because of timing of project and things like that, sometimes it's difficult quarter by quarter. But to maintain profitability, to continue growing, and to go in that trend, that's where we're aiming as a company. The challenge right now, I could be saying, is the sales funnel is good. The challenge right now in the industry, and we have like that, is electronic components. So last year, even with the great results, we could have had higher sales level. So the challenge, if you would say, was the challenge number one for DBox, but you can read all the newspaper and people say it's a bullshit, it's to have components. So this sometimes as well could have an impact on delivering sales. We made some miracles to make that happen specifically, but this is what's going to be the reality for the next 12 months. As you know, and as well, China was closed for a few weeks, completely closed. So if your product is down there, it's not there. You don't have those components. So we're paid to find solution, but sometimes if there would be something that could bring us, let's say, some kind of a challenge for a month or two, that might be those components.
All right. A couple of questions here, and these are, we'll do the final ones because we are running out of time here. Explain the revenue model, assuming you're selling only components to Razer or Cooler Master or whoever gaming chair manufacturers, and how will DBox make revenue from any gaming chair sold? I get two separate things on the components, and then I guess once you become more of a standard.
Perfect. So we'll simplify that. So let's say we work with a Cooler Master. We're selling our Aptic solution that's going to be integrated into their gaming final product. So we're making a gross margin on the hardware that is getting sold. So that's, let's say, call it monetization number one. And yes, when gamer are contacting to DBox platform to have access to all their haptic track for gaming and solution and devices, plus any movie or linear content we will provide them, they have to pay that subscription mode. So we're having that gross margin right now when we sell hardware, plus that subscription as well that we're getting on an annual basis with all people. If you stop to pay, you don't have access to haptic content anymore. If we move to a licensing model, the difference would be, and I'm going to using figures that doesn't make sense, so people won't try to make that. Let's say we sell our haptic system 3,000 to Cooler Master, and it costs 1,000, right? So we're making 2,000 revenue, but we still have to provide hardware. When we're moving to a licensing model, it means that instead of selling hardware, we would be giving an amount a little less than the gross margin, so they make an economy, and the Cooler Master would be buy directly their hardware from a third-party devices. We still have that, instead of a gross margin, it will be a licensing fee per unit, and same thing, we'll have the subscription for the monetization.
And just to clarify, those numbers you threw out are just sort of silly reference numbers, are not at all forecasts or representative of what's actually there.
I made them silly, so nobody was trying to calculate something.
Okay, gotcha. So essentially, if you're like if you just license it, you don't have to worry about inventory and cash flow so much. You say you're allowed to use this, you get a check. It's a little bit smaller than your gross margin, but it saves up all sorts of headaches, supply chain, balance sheet issues, and then the supplier can just figure out their own vendors. Approve. I assume you have to approve the
vendors,
quality and that it's DBox approved.
Approved vendors, so the quality is there, because that's why initially as well, before moving to licensing, want to make sure that people build good experiences, because if they build bad experiences by getting a cheaper system and it's not doing a proper experiences, or our name as well would be affected with that. So that's why we're careful into our licensing model.
All right, and let's wrap it up here. But one final question: what sort of news flow should we expect over through the remainder of the year? Like more partnerships, or what types of things?
Partnership and delivery, as we say, around theatrical, racing, and PC gaming. These are the as well. So it's where we should be focusing. I'm not saying there won't be another announcement, but this is where we should be focusing that. All
right. Sebastien, Steve, David, thank you very much for joining us today. That was great. Lots of questions, lots of great answers, great update on where DBox is and where you guys are going. So thanks a lot. Have a great day, and we'll talk to you again soon.
Thank you, Martin. Thank you, everyone, for your time.
Cheers.